What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also provide a technical analysis weekly as well to get your entries and exits on point. And I do also provide a daily market pulse on X at Hemi137. So check me out there as well. But before we get started, let's go ahead and drop a like to get the algorithms in line to get this weekly analysis kicked off. So, with that being said, let's get right into it. Now, we are getting into a period where things are not super busy. We don't have a lot of major events. We're waiting for some really bigger events to occur, but we are still getting some pretty decent size events, some really insightful events. As essentially this earnings has definitely not let down at all. We've got some very, very interesting information leading more towards a hard landing. I've talked about this for a while, and I've kind of alluded to the whole recession period. People are aware of it. It's been one of the most anticipated recessions, but it's been delayed. Ideally, in my opinion, because of the debt ceiling essentially being pushed off till after the election, the massive amount of spending that is keeping everything propped up. And then I go over the earnings and kind of go over what I'm exactly seeing that's suggesting that we are in for a hard landing. Now you're starting to get some quote unquote official indicators with the SOM rule essentially saying that we have officially entered a recession, and that it's only going to start getting worse and accelerating a lot quicker from this point. So what we're seeing is a lot of seeds have been planted, a lot of things are set up for that exact scenario to play out, and this is why I do this channel, to really point those things out, because once you actually look at it, it seems pretty obvious about ready to happen. But how do you transition that essentially into your normal day-to-day? If you're swing trading or anything like that, it's good to know these events so that you can perhaps reduce risk or put on risk in certain aspects. If you're trading commodities, whatever the case is, I don't trade a ton of commodities, but I am kind of preparing to trade some oil potentially here. So we'll see, getting ready to go into some pretty crazy environment over the next about 90 days. We got about 90 days, maybe even lower. I think it's actually lower than that before this whole thing really kicks off. So without further ado, let's get into what's happened over the past week. Again, there's been some really, really big, insightful news here. One thing I do want to mention is the CEO of Starbucks was essentially fired, only to turn around and directly hire the CEO of Chipotle, which in essence essentially caused I believe it was about a 20% move in Starbucks and about a 13% decline in Chipotle. So that massive announcement this week, I thought it was a really big announcement, a good sentiment for Starbucks. They've had a couple of really bad CEOs, especially some really bad quarters from Starbucks without essentially the CEO really doing anything, especially not this past one, the previous one. The massive decline essentially caused the stock to drop like 12% after close because of the fact that essentially he didn't address anybody, alluded to the fact that there was going to be such a major hit, which you should do, or in case, even if it's a big hit or a big miss, CEO should tell everybody before the fact, as opposed to when actually earnings actually come out, then have to address everybody after the fact. So that was big news that came on this week. Let's get into some of these other very, very insightful, again, data that's been coming out over the past week. So we did have core CPI. That's kind of really what we've been waiting for. We had 2.9 versus 3% expected. And then the car insurance inflation is still up at 18.6, which has been a huge one. It's really been hurting people, especially even HOA fees, condo fees have been really, really high as well. Transportation inflation is still at 8.8, hospitality service at 6.1, rental inflation still at 5.1. So all these are taken into account. This is essentially what we've seen at this point is inflation's been high. So it's chewed away a lot of people's essentially buying power, right? We've lost about 20% buying power over the past couple of years. And then understand that because of the loss of buying power that's essentially chewed away or eroded a lot of our savings, a lot of our you know, not really needs, but wants that we had that we bought maybe during the pandemic. We've ended up having to churn and sell a bunch of things. And now what we're seeing is that at this point, we're in really, really bad shape in that we don't really have much. So the fact that inflation is still high, it's still killing people. And then on top of everything, you have interest rates that are high that are forcing a lot of closures and bankruptcies. And so now there's tons of job losses. It's hard to find a new job. And so we're in a very, very bad position that we're currently set up as. With that being said, the market was a little bit better off of this, but ultimately what happened is I do have down here, and I was kind of a little bit further down, but earnings, we had Walmart earnings and they did extremely well. The fact is they even guided down in future forecast. But the thing is that they did extremely well. And the reason you may be asking this is a couple of months ago, I said even the upper middle class or even, the one percenters were starting to shop at Walmart. Everybody was starting to try to save money every way they can. And anytime, this is a big indicator, anytime Walmart actually does really well, that means the current economic environment is doing really, really bad. We also had Target earnings as well. And Target earnings, essentially, they didn't do so hot. And they're still, again, trying to do better. Walmart, this is the first time, and I think they said in 11 months that they've actually done extremely well. But given the environment and given their general store brands, people are splurging essentially in the grocery store compared to anywhere else because they are looking for cheap entertainment. And I point these things out: Netflix, Walmart, and then you're looking at other things like Uber, right? A lot of people can't pay for this high, essentially repairs on their car because they can't buy new cars. So that instead they're having to take an Uber, and if necessary, right? And ultimately understand that things are not in a good shape at all. And so the fact that we're seeing these things is a big indicator as to our current environment, that things aren't as good as they may seem. So that earnings essentially allowed the market to start pushing up and feel like, oh, we're going to have a rate cut. And that's the next big thing that we're talking about, right? September is the big thing. A lot of people are heavily weighing that the first cuts will come in September. Again, if it's only 25, 50, it's not going to do a whole lot. And you're going to start to see a massive acceleration in more layoffs and more worries and concerns. And you're going to start panic rate cuts at that point. So about 189 or 93% of global asset managers expect rate cuts over the next 12 months. It's at one of the highest peaks it has ever been in history, that they are expecting a cut, and rightfully so, because we are getting deadly close to a rate cut. And I stated this: over the next couple months, if we don't read a rate cut, what more than likely is going to happen is it's going to be pushed off until February. Continue to do bond buybacks is what we've been doing. That's what has been keeping the liquidity and keeping markets up till next February. And then at that point, when you hit the debt ceiling, you got a new president in office. It's going to be a nasty, nasty so. And this is why I talk about the setup, right? I'm not trying to get political. I don't care if you vote for Trump or you vote for Kamala. It does not matter. At this point, they're setting it up. They're not putting in prime candidates in there because of the fact what they're expecting is this whole thing to get offloaded at that point. And they're going to say whoever is sitting in that seat is going to take the grunt of the force during that time. Being said, mortgage demand has dropped to the lowest level since 1995. We haven't seen a lot of these levels historically for decades. That's how bad it is. And it's rightfully so. Even the essentially the odds for people betting against bonds or buying bonds, because as soon as rates start rapidly cutting, bonds are going to skyrocket. And so that is one of the biggest things that people are indicating, is that bonds are going to start upticking here and start really rocketing. Well, I believe it was in October of last year was when we kind of bottomed out. I think it was around 88 when we bottomed out. And then we've been kind of floating between around there and like the 90s. But ultimately, that is what we're looking at. And this is all alluding and coming into We got one more solid week here where we do have some Fed members speaking on Tuesday. I didn't put that down here, but I think we got Bostic and somebody else speaking on Tuesday, because we are coming into Jackson Hole the week after that. We got the FOMC meeting notes on Wednesday, which may hold more weight than usual because you are talking about Jackson Hole here. Then you got Friday with Powell, which essentially he's going to be talking because they are getting ready to start Jackson Hole. And so Jackson Hole is going to be it's going to be a whole week-long thing. So just keep that in mind. So you're going to start hearing rumors by next weekend about what's going on. And then the impactful news going to happen. This is typically about, again, the same time of year, we start really dipping September, October, and then we start kind of rallying towards the back half of the year. And then it kind of leads us into February, March, where we normally have that nasty pullback. So we try to make up for a lot of losses during this part of the year once we get through like October period. So just keep that in mind. All essentially coming from Jackson Hole. Jackson Hole was one of the biggest events a couple of years ago that I talked about. That was a pivot point essentially from when the market sold off. It essentially sold off like 80 points, and then the next day it turned around up like 110 points. So recovered that 80 points plus an extra 30 points, and the market hasn't been down since. And then again, we had another close call last year around that 4,100 level, where again, that's when essentially we paused. And when we paused during that time is when we rallied again. That's when the Mag 7 really kind of took over. And then now we're kind of in this lull period waiting for cuts, and we still haven't got cuts yet. So very busy week. The market really isn't pricing in a lot of this. So do keep that in mind, because it's more so waiting for next week when the actual Jackson Hole is. So monetary policy, again, we won't get anything till September 18th. That's when a lot of people are betting that there's like a 90% chance there's going to be a rate cut. Now, typically that indicator is pretty accurate. I don't think they've ever steered away from that. So it very well could be. Again, the question is it going to be 25, 50 isn't going to do anything? When they start rapidly cutting is when the panic, worry, concern happens. And again, they are still very much concerned about inflation and about all the things I've just talked about. Things are still very much a concern for inflation. Now, core inflation, the next one is until 11th. We're going to review earnings. Again, we're kind of rolling out of earnings. Another big thing with Jackson Hole next week, we do have NVIDIA earnings. So that will be important. Next week will be a very big week because we've all been waiting to hear what's going on with NVIDIA. Biggest concern there being is delay in chips. That's why we've had some massive sell-off in NVIDIA. And so we'll see if they get any bad news from that. Again, if they miss it all, that will be the turning point for the market that's been pretty crippled over the past month or so. So expected moves, we've come way down to 60, so we're about on average. Market's not really expecting any kind of move. So if a move happens this week off of some big event news, that could be a huge thing as well. And then Tesla at 13. Tesla is a little bit higher this week. And then Boeing is about normal. And then JP Morgan is about normal. Now, another thing listed that I do not have on here is monkeypox. I just want to bring this up to your attention. I know people have been hearing about it. It won't have a huge impact till you start potentially discussing lockdowns. If that is the case, the market's going to definitely do something. If it crash, whatever the case is, it's definitely going to be correcting very quickly if that is the case. And then realize what happened back during the pandemic. It may not be as extreme as the pandemic, but it could be half of that, especially because you're starting to talk about messing with supply chains again. And you know how bad that got. So you can only imagine how much worse it's going to get, because we still haven't fully recovered out of it. And we're seeing the inflation side of it on the back half. So just keep that in mind. We'll see what happens. But ultimately, that is something. There's some cases out in San Francisco. They announced an emergency for monkeypox, and then the next day we got smallpox in San Francisco. So just keep in mind with that and what's going on. So now this week, again, we don't have a lot going on here. Still a lot of worry, concern about Target. Like I stated before, they haven't been doing so hot, and so they've been trying to readjust and go for more of that grocery type atmosphere like Walmart does, and they're trying to reduce prices. So we'll see how well they can bounce back this week. That would be a prime one. Lowe's is always a prime one, just like Home Depot. It shows you more insight in the consumer. So those will be very, very important. Palo Alto might be a good security play to be watching this week. Again, none of these are going to move the market. That's why typically I don't really show these anymore, because none of these really have big impact on the market, but they're good to watch to get you a pulse of where the consumer is. So that being said, we do have Snowflake. Again, that could be a big one, especially when you're talking about AI infrastructure. It's going to be extremely important. Toll Brothers would be interesting to watch to see what's going on with that aspect. A lot of people are still buying homes somehow. It's very, very small supply. So it's very, the fact that it's could be institutions still buying. Maybe we'll have to see. And then we got Baidu, which is a really good one for the China stocks. You're talking about AI infrastructure. They could have a really good one. And then you have Workday is a pretty decent one to be watching as well. And then I think that's pretty much it. So this week could be pretty quiet, like I've stated, but we'll have to see. VIP is a good one too. It's kind of like Baidu. They do a lot of different things, but that may be a good one for Chinese stock as well. So do keep that in mind. But yeah, this one's going to be pretty quiet this week, like I said, but we have a lot of big events, and we're leading up to a very, very big week in Jackson Hole, looking for some very big news as people are waiting to hear for rate cuts. And then obviously with the rate cuts has to come with some sort of reasoning as to why, and people want to know that what that reasoning is, because at this point, everybody's been told that things are strong and resilient. And so if you're going to come out and say that, no, we're officially in a recession, then you start drawing massive panic. And then that's when the rapid cuts happen. But again, it takes a year for them to play out. So the fact that we've drawn it out to this point without cutting anything is very concerning, as it will take us another year to really recover or really reap the benefit of those interest rates. That the damage will continue as soon as we start hearing about the damage, which we already have been for a while. It will continue to accelerate because, again, you're still waiting. There's a very lagged effect even when you start cutting for it to really have a major effect. So, and then that's what feeds into the fear. So you start getting the rapid cuts, and then you start getting headline news that's quite scary, right? So interesting to see what happens, but we are definitely in the end game. More people are going in that way that things will flip. Again, it's been a very delayed process because they've been doing that essentially over the last decade. They've been delaying corrections that need to happen, and so it makes it worse when they actually do happen. So with that being said, if you've made it this far, go ahead and drop a like. And until next time, I'll see you guys later.